Hello, this is Mark from Tradinformed.com and welcome to this video on a simple way to test a candlestick trading strategy. In this video I will be looking at Japanese candlesticks and how we can apply them to create a trading strategy, and then how we can use this strategy and how we can test it using Microsoft Excel. Before I go any further, I would like to remind you that if you enjoy this video, please hit the like button, and also if you want to have more content like this, please remember to subscribe. Japanese candlesticks are probably the most common way to view price action. They are visual, they give us a very quick feel for price action and what has been happening in a market. In addition to this, we can use candlestick patterns, and probably the most common, the most talked about and the most used type of candlestick patterns are the ones that signify a reversal or an entry, in particular an entry and an exit point. However, all of us know that throughout the internet, books, trading seminars, there are literally hundreds, if not thousands, of candlestick patterns out there. As disciplined, as organized, as professional traders, we need to be sure, we need to have done our own research, our own analysis. We need to understand which of these patterns give us an edge in the market and which of them don't. How I'm going to demonstrate that we can do this today is a simple way, as shown in the title, and I'm going to demonstrate using Microsoft Excel. So if I click over here, we have a Microsoft Excel spreadsheet, and here on the left in yellow I have some price data. Now this is nice. This is in a standard format. This is actually daily price data, and it is in the standard format of open, high, low, close. So we can take this price data and we can use it to, we can use the spreadsheet to identify candlestick patterns. And how we do this is using if statements, and these are logical statements and they are the basis of all sorts of programming. And this, you can see here in the column marked long hammer, is an example of a if and statement in Excel. So this is a nice simple candlestick test, and I'm going to be looking at two of the most popular and probably most widely remarked upon candlestick patterns. They're just a single candlestick, and that is the long hammer, where we have a long tail below a smaller body, and the shooting star, when we have a high shadow above a smaller body. So this is the formula that I've used to identify a hammer pattern. And if you see here in the formula bar, I started off with if and I identify the bottom of the main body, the bottom of the shadow, and I want to make this greater than what is above it. Finally, I want to be using a factor here, and this factor helps us control the length of the shadow, purely because I want to understand whether having a longer or a relatively shorter shadow improves the strategy, makes it worse, or doesn't make any difference at all. So I've included this as an absolute reference, and I'll show you where that is in a moment. So if these conditionals are true, I'm telling Excel to enter a 1. And so we can see we've got a nice little visual reference every time a long hammer meeting these conditions appears in our data. Now for the short conditions, I'm using exactly the same but in reverse. These are exactly the same formulas but just in reverse. So I've used Excel quite quickly to identify candlesticks, but most of the time we're not going to expect in particular a single candlestick pattern to be significant. So I'm adding a few other simple filters for the candlesticks. The first one of these is about as basic as it comes, and this is the 200 period exponential moving average. Now the price data that I'm using over here is the Euro USD, Euro US dollar Forex pair. Now historically the Euro USD has tended to be quite a trendy market. It has tended to move strongly in one direction and keep going in that direction until it changes direction. So the EMA is often quite a useful filter for the Euro USD. And that's all these cells here identifying the EMA. Over here I have the candlestick range, and this is simply, if I click in here, it's simply telling us the difference between the high and the low divided by the close. What percentage is the high-low range of the closing price? Okay, so these are all I'm going to use in this simple candlestick demonstration strategy. The next thing that we've got over here is our long entry conditions. Now, the spreadsheet that is on the screen is a Tradinformed Backtest Model, and it is a way of testing all sorts of different trading strategies, different markets, different time frames, and different technical indicators and entry and exit points. In a Tradinformed Backtest Model, what you get is a format, a pro forma that you can use to test different types of trading strategies. And the advantage of this is you can start to use things like stop losses, trailing stops, and different, and if you like, multiple different types of exit systems. There is a link on the screen if you'd like more information about Tradinformed Backtest models. So the entry conditions I've got here are, again, I'm using an if-and statement, and if I'm going to enter a long, the first thing I want there to be a long hammer, because that's what I'm testing for. I want the EMA to be rising, and thirdly, I want the candlestick range to be lower than a variable which I can adjust and have a look at. And finally, we only want to enter one trade at a time. Keep things simple. So this is what the result page of a Tradinformed Backtest model looks like, and you can see we've got a number of different inputs, from changing the starting capital, adding a cost of trading, and some preset profit target, stop loss, and trailing stop. Now, profit target and stop loss here, you can see here, are based on the ATR. In this particular trading strategy, you can see what I'm doing here. I've given a fairly wide stop here, 5 times the ATR. So once a trade is entered, we do have quite a lot of slack. But you can see what I've also done is I have made a very high profit target, so that it's going to take a lot of work for most trades to ever reach this target. And so if we're not stopped out with our initial stop loss, we have a wide trailing stop that we're going to use to tag along with us and to exit our position once we start to move definitely in the other direction. So down here, if I can skip down here, what we have is the shadow length multiplier. Now I mentioned this earlier. At the moment I've got it set at 1. If I was to set this to 2, firstly you can see that the results over here change. And what this is doing is making sure that the shadow must be at least twice as long as the rest of the candle. If I was to set this to 3, quite obviously the shadow must be at least 3 times the length of the rest of the candle. And you can see we do change the effectiveness of the strategy at the expense of reducing the number of trades. Now, because I'm using a fairly high time frame, the daily time frame, this is only quite a small number of trades, and it would take quite a lot of patience to be trading a strategy that only opens a trade a couple of times a year. I also mentioned that we have the candlestick range limiter here. If I was to set this to 1 or 2 or even 0.5%, you can see again we are restricting the number of trades and we are changing our profitability. Okay, so another advantage that we have in using a Tradinformed backtest model is we can test different types of exits. Now, I've already explained that the main exit that I'm using here is the profit target and the trailing stop and the normal stop loss. But one that I also like to use and can be quite effective, in fact changes the nature of a trading strategy, is a simple strength close. Now this can be any sort of strength close, but what I've done here is basically tell the strategy if I have 2 consecutive higher closes for a long trade or 2 consecutive lower closes for a short trade, then to close that position. And if I click here, you can see that it makes a significant difference to the trading strategy. I would even go so far as it actually completely changes the trading strategy. What we had previously was a fairly typical trend following type of strategy. What we've got here is something much closer to a shorter term momentum type result or a reversal strategy. We've got 70% winning trades, which for those of you who like a nice high winning trade percentage is pretty decent. You might have noticed here that our compound annual growth rate has declined, so we're getting lower profits overall, but at the same time we're getting a lower drawdown, half as much a drawdown. And I'm sure any one of you will know, if you traded a strategy, drawdown is the worst time to be in a trading strategy, and the lower this can be, the better. So what we can also do is just have a look at try and even up this drawdown by increasing our leverage. So if I effectively doubled the leverage, we can see that our annual growth rate, compound annual growth, increases to just a little bit below 10%. Now this whole process is trying to identify the best trading strategy, the best way that you can think of to deploy your capital in the market in order to earn the best return you can, preferably with the lowest amount of risk you can. So we've got a potential nice little strategy here. We've got a load of trades, we've got 280 trades, we've got a, should we say, reasonable drawdown, and we've got a pretty decent 10% compound annual growth rate. So I can click this button here and we can have a look over here at the strategy. So what we had here was 2 times leverage, and strength close. If I wanted to try something else, I can reduce the leverage again, get rid of that, wait for the results to update, and copy them across. Now here we have 1 times leverage, no strength close. So in the process of identifying the best strategy, we could simply look along here. If we want percentage of winning trades, well, it's quite obvious this is a better strategy. If we're looking for drawdown, compound annual growth rate, again, we can see, we can identify as many different scenarios as we like. So I hope you've enjoyed this video. If you want to see more videos like this, please click the subscribe button. And if you want to learn more about trading the financial markets, please go to www.tradinformed.com.